Kentucky First Time Home Buyer Guide, your source for a loan approval in 2024. I'll be breaking down the mortgage approval process for first-time home buyers, including FHA, VA, USDA, and Kentucky housing loans. Your credit score will be checked first. There's three main credit scores through Experian, TransUnion, and Equifax. Scores usually range 300 to 800 range, with most lenders requiring a 580 or 620 above for a mortgage approval. Kentucky FHA minimum credit score requirements currently are 3.5% down will require a minimum 580 credit score. 10% down will get you down to a 500 credit score, but most lenders will want a 580 and above. VA has no minimum credit score requirements, but most lenders want a 620 and above. USDA has no credit score requirements on paper, but in reality, most lenders want a 640 or above credit score for a mortgage loan approval. I've had success getting them approved down to 620 on a manual underwrite. Some lenders will go down to 580, but it's very difficult to get them approved through GUS, the guaranteed underwriting system that USDA runs your credit through for a mortgage approval. Kentucky Housing offers down payment assistance up to $10,000 currently on a second mortgage, paid back at 3.75% over 120 payments. Minimum credit score is 620. In addition to your credit score, they will also look at your work history and ask for a 2-year work history on the application. They're looking for consistency, steady employment, does not have to be the same job, and if you have job gaps, you'll have to explain it. There's 2 debt-to-income ratios. The first ratio is the housing payment, and then the second ratio is the total debt-to-income ratio with the new house payment plus the bills on the credit report. Typically 40% on the front end and up to 55% or higher on VA and USDA loan approvals. VA is the most lenient when it comes to debt ratio. USDA is the hardest. And on conventional mortgage loans, typically you can't be more than 50% on the back end ratio. FHA will go up to a 57% on an automated underwriting approval. If it's a manual underwrite, your ratios are going to be limited to 40% on the front end and 50% on the back end. Debt ratio requirements, USDA and conventional loans are the most difficult when it comes to high debt ratios. VA and FHA is more lenient when it comes to high debt-to-income ratios. Bankruptcy requirements, 2 years for FHA and a Chapter 7. If you're in a Chapter 13, you can be in it for 1 year with bankruptcy trustee approval and possibly get a loan. Fannie Mae or conventional loans require 4 years out, some up to 7 on some conventional programs, but 4 is the minimum. USDA, you have to be 3 years removed from a bankruptcy and 3 years removed from a foreclosure. FHA is the most lenient. Like I said, you could be 2 years out on a Chapter 7 and a Chapter 13. You can be in it for 12 months. VA requires 2 years removal from a bankruptcy Chapter 7, or if it's Chapter 13, you can be in it for a minimum of 12 months and possibly get an approval. Foreclosure, FHA requires 3 years after completion of the foreclosure date. VA requires 2 years after completion of the foreclosure date. USDA requires 3 years after completion of the foreclosure date. Fannie Mae, which is the most strict, requires 7 years, maybe 4 on some with a high down payment. There's currently 3 main down payment assistance programs: Kentucky Housing Corporation with the $10,000 second mortgage, the Welcome Home Grant of up to $20,000 which is only available usually for 2 or 3 weeks. It opens in March of each year, and usually it's gone within the first 2 or 3 weeks. But with the Kentucky Housing Program, it's available year round. And also there's a 5% grant through a lot of private lenders that will get you a down payment assistance up to 5% of the sales price.